Hi, this is Kerry Artag with Wicked Stocks, bringing you your daily Tesla report for Monday, June 24th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. Just a reminder, the big picture, a longer term 1 year descending channel top does for me represent a 1 year bear trend in Tesla off of that July 23 high. Lower low, lower high dynamic sequence of rotations that are lower in nature. 212 even is the pivot point for that bear market. In other words, we can rally up to it perhaps in the coming weeks and fall away from it possibly through the rest of the year, as the market could then fall to channel support in the very low 100s within 2 to 3, 3 to 5 months or so of testing 212 even. And inversely, if we were to close above 212 even, that would indicate a good low for the year. And over the following 3 to 5 months, I would anticipate the 320s, 330s if we were to close above 212 even. Now, with respect to anticipating 212 even, I've made an adjustment out of frustration to some extent, and that is this descending channel top that we used as our signal for expecting 212.46, the same channel top in the daily chart, within 2 to 3 weeks or so of closing above 182.46 or that formation. Now, we did close above this formation Monday of last week, and Tuesday fell back, Thursday fell back, and we've been holding below it roughly for the last couple of days. But in terms of whether or not I find it reliable now with a settlement back above 182.46, in terms of its anticipating a 2 to 3 week rally to 212.46, that may play out. But I'm more confident actually with the high settlement price that was put out Monday of last week, 187.44. And I'm still just calling it a session containment level. So what I'm saying is if we close above 187.44, it is stair step now. Am I expecting 212.46? Really am not. Given the way this market has hesitated and actually declined, if you will, these meaningful buy signals, I think just taking it one step at a time is the way to play it. Now, if we close above 187.44 and you want to play the 2 to 3 week potential rally to 212.46, have at it. I don't have a problem with that. I'm just going to play it more. The analysis that I'm going to present will be a more stair-stepped approach. So closing above 187.44, this 200.11 3/8 upside Fibonacci from July of last year to April of this would be expected within 3 to 5 days. And that is also a part of a range of resistance that begins at 198.25. So that's the setup, in my opinion. Can you sell 187.44 on a day trade basis? Yes, you could sell 182.46 on a day trade basis, assuming we opened below it. But we very well may open above 182.46. I've reduced it to an intraday pivot point only. It may have consequences on a multi-session basis, but in terms of anticipating a 3 to 5 day rally this week into later week, I'm much more comfortable now with the settlement above 187.44, and I think that is your signal now for 198.25. 198.25 being the beginning of a range up to 200.11 that can contain weekly buying pressures. We can fail here for a week, fall away into the following week perhaps. If we close above 200.11, then I'm clearly anticipating 212.46, which is on the daily chart what we find on the weekly at 212 even. This is our significant resistance, our overhead ceiling as we move through the third quarter and into later year. And if we can push through, close above 212 even, once again, a good low for the year with meaningful gains anticipated through the rest of the year. But until then, we're in a longer term bear market, but kind of near to midterm, we're in this sort of flux state, this two-sided congestive dynamic, which is one of the reasons I'm off 182.46 as a meaningful pivot point, We've already closed above it once and failed, but we haven't failed to the extent that I was anticipating late last week. We're in the sort of inside zone, inside the range that was established last Monday. We traded inside that through the rest of the week. So for the day, pushing or opening above 187, 182.46, 187.44 likely, where we can place a daily high. And if we close above 187.44, we have a good low for the week. We should then, with three to 5 days, push into that 198.25 to 200.11 region, where we can top out on a weekly basis. Now, I'm talking to 3 to 5 day swing traders, of course. You 2 to 3 week swing traders, I don't know exactly how to present this, to be perfectly honest. If you're antsy to go long, I think you've got a case to be made with a settlement above 187.44. Just know that within 3 to 5 days of establishing that long position, I think this market can run into headwinds, into trouble, as we push into that 198.25 to 200.11 region, where we could top out on a weekly basis. And if, yes, we close above 200.11, then I'm expecting 212.46 within 3 to 5 more days. This is the big resistance area where the 2 to 3 week swing trader can take profits and play the short side. And the 3 to 5 month position trader can play the short side at 212.46. I think I've covered the upside pretty well. Let's talk the downside right now. And that is to say that if we happen to, open below 182.46, that will allow selling pressures to continue building into the later week, perhaps, or at least for the day. Our support at 169.52 to 172.91, which you can see on the far right in the support resistance area, is nothing more than this newly formed channel bottom that is based in part on the recent high that was put out a week and a half ago. It's also the mid band of this channel structures that I've been mentioning. You can see how it held nicely for a week and a half, 2 weeks, and it also held to the downside. 172.91 to 169.52. There's a part of me that wants to call this a 3-star support area because of the convergence of these areas. So I think you can aggressively buy this on a day trade basis, and I think you can also establish a 3 to 5 day swing trade here, as we can round back up perhaps to 187.44 within 3 to 5 days of testing the upper 160s, low 170s. If we, final thing I'm going to say, close below 169.52 later in the week, we haven't far to fall before testing what I consider to be our pivot point through July, our downward pivot point, 160.69. Now, I'm talking to 2 to 3 week and 2 to 3 month position traders, 2 to 3 week swing traders here. With respect to 160.69, you can buy this in anticipation then of bullish rotation, perhaps, back into the lower 180s or this channel resistance over that period of time. But if we close below 160.69, that is your go with sell signal as we move through the rest of the third quarter. Closing below 160.69, I see no good reason to be long Tesla in any way, shape, or form as we move through the rest of the third quarter, because I would then expect this 111.11 descending channel bottom to be reached within 2 to 3 months. This could be a 1 month sell-off, but the way volatility is playing out now, I think that's every bit of 2 to 3 months before realizing 111.11. 111.11 is dropping, as you can see, into the low 100s just over the next few weeks, which correlates presently with that 101.81 January 23 low. So there you have it. I don't think I really need to say any more. I spent a lot of time early in the video really sort of dissecting this 182.46, 187.44, 3 to 5 day buy signal, possibly 2 to 3 week buy signal to 212.46, but I'll let you play that as you see fit. But yes, because of the longer term bear trend, holding below 187.44 will allow this upper 160s, low 170s. I don't know about this week, but certainly possible. And if tested, able to contain selling on a daily basis, quite possibly through the rest of the week and into next. And if we close below 169.52, the much more meaningful 160.69 within just about another 1 to 3 days. I think that pretty much summarizes it. Very stair-step right now. There's not a lot here for the 2 to 3 week swing trade that may emerge here in the coming days, but we'll just kind of take it one day at a time. I will be back tomorrow with Tuesday's Tesla. Please click like, please click share, please click subscribe, and check out Wicked wicketstocks.com. Take advantage of our 5-day free trial. I've been telling you about the NASDAQ 100, the triple Q you can get on a daily basis, presently testing a significant overhead long-term resistance area for the last couple of weeks that has, I think, consequences into later year. I'll let you check it out. I'll be back tomorrow with Tuesday's Tesla, and you have a great day.